Our perception of money is changing rapidly, and banks are at the center of all of it. From how we access it, to how we buy, to how we trust that that money will be there when we need it. I'm Kiah Haslett, the creator of FinTech Takes Banking. Here on Bank Nerd Corner, I talk with bankers, economists, academics, and more about the complex dynamics shaping the financial services landscape. This week on Bank Nerd Corner, I'm joined by Shawn Main, Chief Business Architect at Vantage Bank, Texas. In this episode of Bankers Hours, Shawn and I talk about Vantage Bank's interest in the digital asset space, including blockchains, stablecoins, and smart contracts. Shawn shares how the bank learned about this new technology and payment forms, how they brought regulators and customers on board, why Vantage is forming a consortium, and what the future of money could look like. Banks worldwide use Tactile's AI decision platform to power their credit, fraud, and compliance workflows, and adapt them in weeks, not months. Built for banking, Tactile's platform is transparent, audit-ready, and made to test and optimize decisions continuously. Learn more at tactile.com. Hi, Shawn. Thanks so much for joining me today.
Hi, nice to see you, Kiah.
So we met at Money 2020, and I had joked with you that I had been trying to get in touch with Vantage Bank all year. And so it was unfortunate for you and fortunate for me that you and I were in the same dinner together so that I could finally talk to someone about all the news Vantage has had this year in the stablecoin and tokenized deposit space.
It's been a fun time, that's for sure. Well, happy to connect.
Yeah. So first off, tell me about yourself and something banker colleagues might not know about you.
Well, sure. I'll start with I've always had a passion for Jeeps, and I actually rebuilt a 1946 Jeep Willys by myself. I tore it to the ground and brought it back to life, and so that's been fun. I can't wait to actually bring it up to my home up here in Fort Worth, but right now it's in storage.
I know a little bit about Jeep culture, mostly about the ducks. Are you a duck guy?
I not so much anymore, just because everybody seems to have a duck, and that was not the original intent. The intent was to, if you really like somebody's Jeep and you want to give them a compliment, you give them a duck. But I think most people just stick ducks out on their dashboard.
Oh my gosh, do you think that people are buying ducks for themselves and putting them on the dash rather than collecting them the way God intended?
They have to be, because I've seen so many stock Jeeps with ducks, and that's not the intent. The intent is you've got a cool rig and somebody really appreciates what you've done with it.
All right. Well, I'm sorry. I guess that explains why you're not handing out any ducks, but it sounds like you will accept a duck on your rebuilt Jeep. That's really cool. How did you get into banking?
So after a brief stint of roofing, dishwashing, and waiting tables, I realized pretty early I didn't want to do that my whole life. And I was actually driving by a small bank branch in San Antonio. They had a posting for a teller position. I went and applied, and I actually had a better fit for their data processing role. And so I started in data processing right towards the tail end of my high school career. And that was checking coding and sorting checks and doing all the imaging.
Yeah,
and
I was going to say, what kind
stuff.
of data were you looking at? It sounds like checks?
24/7 checks, just literally scrolling by, and then when you have an error, it would stop, and you would key encode the new value, and then if you had to physically encode the actual MICR line, so I did all that fun jazz early on.
Did you work at a bank all through college or right after college?
Through most of college, I actually took on a teller role when I was in college for Bank of America and worked there for a while, and then I did some frontline calling and RM type work for a little bit, and then eventually moved on to a company like Rackspace and started kind of cutting my teeth on the tech side.
Okay, yeah. So today you are the Chief Business Architect at Vantage Bank. Tell me about Vantage and what your job entails.
Yeah, we're a $5 billion institution. We've got about a 33% foreign national mix, mostly a commercial bank focused on commercial lending. And for me, myself, Chief Business Architect, and that role really entails making sure that all of the technology and the things that we pursue from a technology perspective align with the business, and that we look at that stack and we say, hey, how does that help us either enable new lines of business, new partnerships, or really just enhance the efficiencies that we do in the back office. So, good example would be is I've got a development team, we've got a data analytics team, and that
Okay.
those two teams are really designed to help us either look at efficiencies in the back office, help employees, kind of automate some things, or build new tools that really help serve them better.
So, I wanted to speak with Vantage because you guys have made some big splashes in kind of the digital asset space. So, my first question is, where did Vantage interest in stable coins and digital assets begin, and what intrigued the bank about them?
Well, it actually didn't start with just stable coins. About 5, 6 years ago, we saw where everything was heading from a digital asset perspective. And we started looking at custody companies
Oh,
because we said,
okay.
yeah, we said, hey, that's a natural fit for banks to actually custody assets. We seem like that's where it's going to head. We weren't unfortunately allowed to do that back then. It was a little more taboo at the time. And so we just stayed as close as we could to the industry. We
Okay.
started bringing on customers that are, digital asset miners, as an example, or we would focus on customers that maybe had portfolios where the bank didn't have to touch the actual digital assets.
Oh, okay.
Yeah,
Yeah.
so did that on purpose because we wanted to just stay close to the industry and have a good understanding. And then, obviously, as the stable coins came on the scene, we saw pretty quickly that was going to have a huge impact on the industry as a whole. And so we just started researching, learning, and trying to understand, what are those use cases? How are people using them? Obviously, it was mostly on the exchange side of the world, but
Yeah.
that's really what got us into it out the gate, and then we led to where we are.
And so you mentioned with your research, like trying to find these companies to work with or partners to work with. What was that process like? And, why was that important for you to not just like, I don't know, read or maybe personally own some cryptocurrency?
Uh, so, I mean, that whole journey that I just talked about, that last 5 years, all of that was about understanding the landscape, understanding who the players are, who the partners are, getting a good understanding of what the relationships with those partners would be. And many of those partners that we talked with even 5 years ago are still partners that we have today and that we continue to push forward with. And so all of that was really about gaining that understanding where we could best play the right role, and how we could find the partners that ultimately provide the kind of the right viewpoint on risk, compliance, and just understanding how they fit into the ecosystem for banking today.
So, you guys made some announcements this year, but how did you come up with the use cases to and problems to solve, and how did you get customers on board with these solutions?
So you're talking about the POCs that we did
Yeah.
earlier. Yeah. So those POCs were really designed to understand, can we operate this technology within a regulated bank using our traditional risk frameworks? And what would it take to augment those risk frameworks? How will we adjust? And so really those POCs were all about learning. And we in fact invited our regulators to be a part of that because we said, it's also a good thing for them to learn as well.
Yeah.
And so that was the whole intent behind that, is so that we could gain a better understanding of what those use cases are, how do we apply them, and that's why we ended up doing 3. So the first one was really just to see it live and operate it and move the funds, and really just to gain more education around that.
Mm-hmm.
The second one, we said, this clearly has applicability to cross-border use cases. So what would that look like, and how do we involve a customer in that process? And what would be the challenges that arise? There were a few, and a lot of good learnings there. And then obviously we took that on to the third use case, which was all about the escrow automated geolocation release of payments. And so that was really just to understand, can these smart contracts really apply to our customer use cases today? For example, Treasury would have a lot of benefit from things like that. So that was the intent behind that whole exercise.
Yeah, that's kind of amazing, and I feel like you guys have the luxury of time, right? So thinking about
Oh.
well, but even thinking about like everything you've learned in 5 years, kind of the identification of partners, thinking about what's possible, how could we do this in like a POC today, or it's POC, and then how could we actually make it useful for clients? Who would be a good client, right? Like that, all that stuff kind of takes time. And
It does.
I think about your guys' journey versus other banks that may be kind of newer to this space and maybe starting doing that work that you guys started 5 years ago, right?
Yeah, and that was really a lot of the intent of us always kind of staying close to this because we knew it would take time to learn. We knew it would take time to upskill our people, to help them adapt their processes, and we know that will be difficult for most institutions. Just because it's a lot of new information, and it's a totally new way of thinking about how money moves and how value is exchanged, and so it's a lot.
So, how did you identify which partners to work with? Probably because you couldn't go to your core and ask for some of this stuff. And then what tech or capabilities or knowledge did the bank need to build on its own?
Yeah. So again, having a good understanding of custody partners, how custody partners work, what their infrastructure looks like is super important because custody is a big part of this entire ecosystem. And a lot of that is because of those early partnerships, Custodia being one of those partners. They had a lot of expertise in that. So they obviously gave us a good amount of information and knowledge around that. But then even as you talk about what other infrastructure providers do you need to just support this? So you've got reserve management, you've got ledgering, you've got wallet screening, you have all these other things that you have to layer and link together. And all of that was from partners that we've already had. So Infinite being a good example. We're using them on the BaaS side of our business so that we can support fintechs. We're going to consume that exact same technology for ourselves as a bank and leverage that as a part of this offering that we have for all other institutions. And so that a lot of our partners were partners that we already had, and we're just finding new ways to work with them to leverage their expertise, their technology, their capabilities, and then roll that in. And a lot of that was also intentional because we didn't want to complicate it by adding more and more layers of technology. We wanted to leverage what we already have. Yeah.
Yeah. What about on the talent side for the bank? Was there any sort of adjustment or learning or people you needed to bring on to enter? I don't even know if you conceptualize this as a new business or a new way to deliver the same business.
We are treating it right now as a new line of business inside of Vantage. So it's very similar to like a BaaS offering. We call it internally modern correspondent banking because we see it as really an extension of correspondent banking for other banks.
Sure.
But really, a lot of the skill sets was all around understanding, especially the kind of the risk frameworks, the wallet screening process. How does that contrast or compare to the existing AML processes that most banks undertake today? What adjustments need to happen to those risk frameworks, or even the operational side of this? Because it's almost the same problem that you have with like FedNow, in that you now have 24/7 settlement. How do you manage liquidity? How does the accounting office actually reconcile all these things and do this at scale? And so those are all the things, and those are all the skill sets that have to be built up at really any institution.
What's funny is that you mentioned BaaS and or banking as a service and FedNow, and I'm constantly fascinated by I think there's kind of a canary in a coal mine dynamic, or that where the BaaS banks they're changing their business models and making them very tech driven, and they have to really that tech stack needs to be responsive. It needs to be kind of designed for scale, needs to be digital first, and that's their choice. But I also think that these banks indicate where banking's technology at least needs to go. And that maybe these banks are 5 to 10 years ahead of other banks that have more traditional branch-based models and more traditional geographic customer base. And but that the whole industry is going there. Like in the future, we're going to do this more, not less. And I think it's interesting to conceptualize many of the work that you guys have done, or the partners that you found, or the way you're solving these problems as like you're just kind of doing the work a couple years, like maybe a decade before everyone else is going to have to do this, because that's just where like real-time ledgers and irrevocability of payments and fast, things moving fast, money moving faster. Like that's just where we're going, right?
That's where we're going, and for sure, the U.S. has always been a little bit behind, other countries like Europe or even SEPA payments and things like that. And unfortunately, yes, the industry has not really kind of kept up with that. You
Sure.
see a lot more of the real time kind of capabilities on the credit union side. They were much more quick to adopt these real
Hot
time cores.
take.
Yeah, but the traditional finance commercial banks have just not been able to do that. Some because of the providers we have today, but also just because of the pace at which the regulations move on that side of the house. So I think what we're seeing now is, both politically and regulatory wise, those doors are opening up a lot more, giving us a lot more of an opportunity to actually get into this
Sure.
new realm. And we have to learn. We have to learn
Yeah.
as an industry because everybody, every business, every consumer wants real time payments. They want real time settlement. They want finality to their payments, and they want to understand how to reduce risk in their overall, their overall money flows.
So before we talk about your work with DX Express, broadly, what have conversations with customers been like once you identified this use case? How did you sell them on it? And then also, what have the conversations with regulators been like? What were they concerned about? And how were you able to bring them on board as maybe not even as a partner, but at least as not as a big skeptic?
Yeah. So, most of the customers, after we did the POCs, the first things they said is, wow, if you really could automate, like you're saying, and make those things happen in real time, that would really change my business. It would change
Oh,
how I
really?
operate. Yeah, it would give me a lot more efficiencies, both in my back office, because maybe I can automate some payments to my contractors or my subs. Or I can automate more payments out to my wait staff, as an example, and not have to deal with cash. So a lot of these customers just said, like, love the dream, love the vision, would love to see how we make that happen, because today it's a very complex process with all the different fraud tools that we give them and all the different money movement options and technologies. Really, all they're looking for is a better way to operate their business at a more efficient scale, and this technology enables it. So
What about regulators?
So the regulators, again, just like all of us in the industry, are doing their best to educate themselves and understand the risks. These are novel risks. They're new things that we have to think about, and they're not too much unlike the real-time payment and FedNow risks that we're coming about. But in the end, it's all about this new way to monitor transactions. How good are the funds? How deep do you look into these things to understand the risk? What is the liquidity risk or the risk, systemic risk as a whole to the entire ecosystem as
Yeah.
this scales? And so a lot of the conversations has all been around like, well, what happens when this scales? Have you thought about this liquidity risk? These are going to create new dynamics for deposits and how deposits flow between institutions. And so there's just a lot of things that we as an industry are going to have to figure out that uh, on the DeFi side of the house, they have somewhat figured out, but not
Okay.
completely,
Yeah.
because they operate in kind of a different environment. They don't have to worry about so many things as the trust of the U.S. dollar as the banking system has to worry about.
Sure, sure. In banking, conditions change fast. Credit teams need to adapt without sacrificing credit quality, compliance, or control. That's why banks choose Tactile's AI decision platform. It gives teams the power to design, test, and refine credit, fraud, and compliance workflows using AI quickly and securely. With seamless data integrations and built-in testing, every decision flow can be optimized in real time. With Tactile, AI isn't a black box. It's transparent, explainable, and regulator ready, so banks are always prepared for what's next. For more information, visit tactile.com. So you helped logistics firm DX Express send tokenized US dollars to make cross-border payments between Mexico and the United States. So first off, what is a tokenized dollar?
Tokenized deposit is exactly like the deposit that's in your bank account today. It's just on a new technology layer. So all we've done is take your deposit and basically put it on the blockchain.
Okay. So, sure. I guess I could understand those words. But what did that look like from the bank side, and then maybe the DX Express side, and then maybe the recipient of the payment?
Yeah, and again, this is all kind of MVP, POC type stuff. But what we ultimately did is we said, look, let's have the customer set up a MetaMask wallet. They'll use that wallet just like a normal crypto self custody wallet. They were actually in Mexico, and so we took funds from Vantage Bank. We converted those funds into an AVIT, which is a form of tokenized deposit stablecoin. We then used that. We had a company in the U.S. Transfer those funds from their wallet, their hosted wallet, into the DX Express wallet into Mexico. Customer received those funds. We verified all the AML checks and transaction monitoring. In fact, that was where we got a little hung up. Is some of the monitoring caught some things, and we had to fish some things out. But then after that, the customer then took the funds and then sent them back to us. So that was really the whole test. It was meant to kind of show how quickly these things can happen. What would be the interaction with the customer be like? What would be the concerns and questions that arise out of that, both from the customer and even from our side. So that was really the whole process.
How long did this whole thing take? And then how long would it have taken using, I don't know, more TradFi rails?
So in this particular instance, it actually took longer than it should have. But this was because, but it was actually a good thing. So the transaction actually occurred in 30 confirmations. It took less than about a minute and a half for the actual transaction to go through. But what took us so long is the customer ended up transferring a penny from a DeFi exchange, and it was a brand new wallet, but that penny got flagged in our transaction monitoring system. And so because we were being so careful about this, because we had a lot of eyes on us and a lot of regulators kind of paying attention, we wanted to make absolutely sure, like, what was this? Do we clear this? How do we clear this properly? How do we make sure we disposition this properly? And so we had to do a lot of research, and it took a minute, but then we found out, the customer told us, oh yeah, well, I sent this penny to validate that the wallet is actually good.
Oh my God.
So the customer didn't know he was doing anything wrong. Yeah. He just was testing things out. And sure enough, we get a little hung up, but we ended up clearing it. It was totally fine. It was a totally legitimate transaction. And so that was really the only reason. It was not because the transaction wasn't fast.
Oh yeah. For want of a penny, the whole transaction, the whole little task gets sidelined.
Well, back to your question on like how long would this normally take? So if you're talking about in a traditional Swift world, it could take anywhere between a day to 3 days. It just depends on how many banks are in between that transaction and that customer and who receives the value for that payment.
So I noticed in the press release that you guys used a smart contract, or there was use of a smart contract. Yep. Can you define that for us and tell us like how a smart contract like operated in this transaction?
Well, all smart contracts are effectively is just you can think of it as code that lives on the blockchain, and then that code just tells the token what it can or cannot do. Okay. So it's just conditional logic, just like anything else. And so if I say I want to have a contract that defines a token, this is what the token looks like, this is what it can do, this is where it can move, and this is how it operates. That's all a smart contract does. I like to think of smart contracts as really just open source versions of the code that money uses to actually operate.
Oh, interesting. So you had to use a smart contract in this to define the token, or what else?
Yeah, so you basically define the characteristics of the token, what the token's called, again, all the properties that a token might have. So if a token can be transferred into a wallet, how does it transfer out? So you just define these basic properties of how a token can operate, what wallets, and you have to define it on a specific blockchain because every blockchain is unique, and obviously Ethereum has the smart contract capabilities, whereas Bitcoin doesn't. So that's really what it's and all that does is really define the ability for somebody to execute code on this, blockchain, quote unquote internet, so that it can actually, all the compute can happen.
It's funny because I feel like some things about digital assets and digital money, they make all these unwritten things in the economy, like money, visible. And there's always these questions when you're like an Econ 101 student of like, what is money and what can money serve and do? And, I remember even when, and like maybe we could argue about blockchain being money, and arguably blockchain is not like a good use for like the kind of daily transaction. It's a store of value, but it's not like I wouldn't use it to buy a pizza anymore, right? The way we used to be able to use
Bitcoin. No, nobody wants the tax implications.
Yeah. And so, but it is funny because I feel like smart contracts or digital assets, like they kind of make some of that stuff visible in a way that like, actually there's been a lot of work in the regular financial space, the TradFi space, to make this stuff invisible, right? Like to make payment rails invisible, to make money invisible, right?
Yeah, I think as an industry, what we've always been trying to do is make the system easier to understand and to use. But behind the scenes, there is a lot of obscurity. There's a lot of complexity, both in how we interact with one another. And so we've always been trying to simplify that experience. And we've just, what it's kind of boiled down to is it's created this like mess of just rails and systems that we have to, to use to trade data and value.
Yeah.
And the blockchain ultimately consolidates a lot of that down to where we can trade that data and value all in one, and it's very transparent. Whereas in our system, it's not lacking transparency because it's trying to hide something. It's lacking transparency because it's kind of a gobbledygook of mess of things that we do to make it all work.
So Vantage isn't just building like solutions for customers. You're also building a consortium. Why did you guys decide to explore a consortium?
Well, I think it's to the point that you mentioned earlier that most banks don't really know what this is. They have a hard time understanding what it is. They don't have the skill sets, the people, the technology. In many cases, not that all banks don't, but a fair majority are struggling with this transition. And so we felt like, why not use our knowledge, our expertise, our capabilities, and actually give back something to the industry so that they have something to help them compete with what we feel is soon to be a very competitive environment with more entrants coming in, more competitors coming into the space. And so we wanted to give the industry a way to compete and the tool sets that they'll need so that they can start to experiment and understand this technology, because it is a heavy lift. It's a big lift.
So would a consortium bank use or leverage the technology and the partners that you've already built?
Yeah, there's a couple of options. So we have basically a turnkey SaaS platform that would enable them to do full lifecycle management of their stablecoins and tokenized deposits and all the on-off ramping that they would need. But they also could use their own wallet infrastructure and capabilities, but still leverage the token and really the capabilities that we built at that smart contract layer, so that they don't have to, I guess in effect, mess around with the wallet and the blockchain side of it, so they can, technically pick up their own, SaaS company or build their own APIs or whatever they want. But really what we're trying to do is build the network so that as an industry, we can finally take control of that monetary layer that we should have control over versus giving that back out to, some of the large big tech and big banks.
Sure. And this is almost like, is this like the new Visa moment for banks where they're all going to, actually, and I learned about, I'm not like one of those people who knew about the history of Visa. When you become a bank reporter, they don't just like tell you everything. So I remember listening to a podcast about the formation of Visa, and I had like no idea probably how much work it was to get all those banks to work together. And then, obviously like Visa is now its own company and whatnot, but you're just like, man, that's crazy. Like if they didn't work together, we just wouldn't live in this world,
That's right. And, that was a really good example of banks coming together early on to solve a real world problem. I think, for me, the only the only reason that didn't turn out the way that I think it should have turned out, in my own opinion, is it's now too tightly controlled by a very small group of banks. And we ultimately see this as this should be controlled by all banks, and
Sure.
all banks should be able to transact intermediary free without needing others in the mix. So ultimately, yes, that is an example of when the system was didn't have the
Yeah.
capabilities. They've added it, but I think we're at a point in time where yes, there's no need for all these other networks anymore. We can finally all transact
Yeah.
on the same rail.
It's the difference between a consortium and an oligopoly, like,
Yeah, yeah.
so where does Vantage think the world or financial services is heading? And I feel like we're kind of gesturing that with like the creating the consortium, but like, yeah, like, what do you think's out there?
Well, I mean, I think it has been said plenty of times, but I do believe the world is all heading towards tokenization. So whether that's real world assets or monetary assets or securities or whatever, real estate, it is all heading that direction. The only way for the efficiencies that we all want to have, that 24 real-time settlement, the ability to actually seamlessly transition between assets, we've all got to tokenize. And so I think that's where the world is ultimately heading, because it's the only way that you get real efficiency. It's the only way you really start to remove some of the complexity in the system today. And it's really the only way that if you ever really want to get into this world of agentic payments and using AI and automating a lot of those things, you've got to have that transparency. You've got to have that infrastructure and those foundational elements. And so for me, that's definitely what I think, just, kind of long, broad vision there.
I don't know how many banks share your belief that everything's going towards tokenization. What
Probably
is in
not.
store for those banks? Like, I mean, and like, side note, I'm working on a story about checks, and I this morning was told that someone was gonna like pay me back or something. It was like for reimburse me, and they're gonna send me a check, and I was like, like really, like, can I just give you my Zelle? and so I think sometimes, like, I'm a bit of a crypto skeptic for personally, not like about tokenized
Yeah.
per se, but like, how can I live in a world where I'm getting a check and also like you guys are running this like tokenized deposit consortium?
It is going to be a huge problem both for businesses and consumers as all of this shakes out. And so, I don't know how long that will take. Maybe it's 5 years, maybe it's 10 years. Hopefully, it's not 10 years. I think that would be scary because, to your point, the one of the bigger problems that our industry as a whole has had is it takes way too long for us to adopt new technology. So the reason
Yeah.
Europe can move so quick is obviously a small number of banks and heavily regulated and kind of pushed in certain directions. On our side, it's all private entities, and so we take forever. I mean, the best example I have is you still have EMV implementations going on,
Oh, really? Oh my
which is
God.
crazy.
I remember when 26, that's been like a decade.
It's been probably like I think 15. So that's the problem is we keep too many of these legacy things around, whether it be
Yeah.
checks or these legacy systems, and that creates just too much optionality, frankly, and too much complexity, and businesses don't know what to do. And so, as you see, modern owners of businesses, modern consumers evolving, like you said, I don't want to have to deal with a check. I don't know what to do with a check. I mean, I do, but that's what most people are saying is this is complicated. I don't know how to do it. But then you also at times don't have another option. Like your
Right.
only way is to pay someone by check because you don't have cash or they don't
Yeah.
accept Zelle. And so, it may be a little bit philosophical, but in the end, I do think we have to start to figure out how to reduce complexity as an industry because it's too complex. It's creating too many problems, and we're
Yeah.
having to bolt on too many like extra solutions to solve for those problems. And that's really the gap that a lot of these fintechs are filling. Is they're saying, "Hey, here's a real niche problem I can go after and I can fix and solve." But the truth is we really have to come together and figure out how to solve this, in one go. And otherwise, it's just going to be more more pain.
Yeah. Well, and I also think, you're right about the kind of the complexity coming not from like necessarily something being complex on its face, but it's complex because we're kind of connecting the legacy infrastructure and bolting on a bunch of things. And that just, you can kind of imagine that that in itself adds complexity because we're not just tearing it down and making it the way that it should be with the best available technology or technology that is designed to be kind of more useful in the future, right?
Yeah, well, it also adds a lot of fragility, and that's where you see a lot of fraud coming into these older channels, whether it be checks or ATMs or
Yeah.
whatever debit cards, et cetera. It's because of all that fragility we've built in the system. There's just so many avenues to take advantage of, and so I do think blockchain solves for a lot of that. It adds a lot of the transparency that you need. It adds a lot of the controls and protections at the monetary layer that really help that problem. But no doubt it will take some time to get there and some education.
Yeah, I mean, if we have a world where we have like tokenized deposits and checks, I'm going to be so mad. So
I hope to get rid of checks too. I mean, we all have. I mean, that's been going on forever.
So a non-bank question for you is, what are you reading or watching right now? Or what are you going to be talking about at Thanksgiving and recommending to people?
Well, I do have some awful books I read. They're not like fun. That's a bad way to put it, but they're just not fun. So like Banking on Blockchain was a good book that I just read, and that was really all about the legal side of it. So I mean, again, that's why I'm saying it's not
a bad
fancy
book to recommend. Yeah, no, I get you now. I pick up your meaning.
Yeah, but another cool book that I do like is Layered Money by Nick Bhatia. That's just a really cool history of how all these things kind of came about and how money came about. And just a show that I just finished, so a little bit more on the personal side, was Resident Alien. I thought it was a really funny show. It's a show by Chris Sheridan. I think it's on Netflix, if I remember correctly.
Okay.
But it's basically about an alien that is hiding in plain sight, and it's just goofy. So I just thought it was fun.
Yeah. Well, I'm glad that you're not just watching like
documentaries.
Documentaries. with your fun, scintillating book choices. I'm sure you're a riot at book club. And then my final question for you is, what is your favorite non-bank topic to talk about? Or if you weren't a banker, what would you be? And you can't pick a Jeep mechanic either.
I guess, the other thing that most bankers don't know about me is I'm also a rancher. I raise deer.
Deer?
So deer, yep.
I didn't know deer needed like a farm. I thought the ones that live in my neighborhood, those are free range deer. I
have exotics, so like fallow and red deer. Most people take them to put them on their property because they're pretty.
Okay.
And I don't do it for like, monetary purposes. It's just for fun. It just helps me keep the property in shape, and keeps me in shape because I get to go out and get on the tractor or do something. Don't know if I'd want to do that as a living, but I don't mind doing it as just a kind of relaxed kind of thing.
Is that your favorite non-bank thing to talk about? Is exotic deer?
No, that's definitely not my favorite. I like I said, I do a lot of four-wheeling. I do jeeping. I do a lot of stuff like that. Okay. So that's fun. I do a lot of tinkering with building small apps on the side using like AI coding and things like that. So a lot of little tinkering stuff. So I'm a tinkerer.
I can't believe that if you weren't a banker, you'd be a deer farmer.
Yeah. Well, I don't know if I would raise deer specifically, but I would at least be a rancher, or at least go. I would do something. One of the more fun activities I really like is I just got back from a hike in Washington. I love backpacking, and so I did a 5-day hike. It was 35 miles. Yeah, so that was really great fun. Great views. If I could honestly do that, I would travel and just do that all day long.
Yeah, that would be your job. Got it.
Yeah.
Well, I'm glad that sometimes I feel like the joke is in the online spaces that you're supposed to get outside and touch grass. And so it sounds like, in addition to doing all this stuff with the blockchain and consortium building, you're also getting outside.
That's right.
Well, Shawn, thank you so much for joining me today. This was a really fun conversation. I'm not sure I fully still understand everything you've told me, but I am kind of, at least I feel like I have the language that if I encounter, if someone is like, hey, instead of sending a check, we would like to do a tokenized deposit transfer to you. I have some language to understand that.
Yep. Just think of it as, peer-to-peer or bank-to-bank or business-to-business. It's the same thing. We just have different rails.
Perfect. Well, have a great rest of your day.
All right. Thanks, Kiah. Thanks for having me on.
Thank you for listening to this episode of Bank Nerd Corner. Stay up to date with news and trends in the bank space by subscribing wherever you get your podcasts. Also, if you love FinTech Takes Banking, please tell a friend. Talk to you next time.